Hello and welcome, everybody. We have a special morning show today. I am your host, as always, Steve Strazza, Director of Research at All Star Charts. While Spencer and JC are in Baltimore, the inmates are running the asylum here. We're going to have just about everybody from the Analyst team on. So we got a great show. We'll hit all the news as well. Do our best there. Alfonso will be running the show. So make your coffee, wake up your neighbors. It's time for the morning show. Let's go. Gentlemen,
how we doing?
We're live.
Look at this, huh? Wow.
Grant, what time is it for you?
It is 10:30 p.m. right now.
Oh man,
I've just got home from. I actually just went to gym. I just went there to hype myself up. You know, did some shoulder exercises. Got the sweat on.
You're a night gym guy?
No, not at all. Not at all. Don't like it at all. But I thought I'm coming on here today, so I might as well go to gym. You know, I usually go at like maybe 5:30 in the morning.
So it's 10:30 at night for Grant. It's 5:30 in the morning for Patrick.
Yep.
A dedication from you guys.
Wouldn't want to be anywhere else, Steve.
So Grant brought a ton of charts. Let's hit these. Let's walk through these. I thought this would be a really nice treat to do state of the markets with some of your breath work and everything else. So where do you want to start?
I mean, yeah, slide 2 is a great way to start. I mean, this is it's a bar chart, and we've got the blue bars, which is every year is a blue bar. Now the red dots is the intra-year drawdown. So I just wanted to point out, this year has been an above-average return, but below average drawdown. So it's a bit of an interesting market that we're currently in. So
you could see COVID really stand out. 2020, you see the red dot down about 35%.
Yeah,
it's strange to have such a shallow drawdown.
But it's not unique as well. I mean, you can scan your eyes across that chart, and we've had years that have been shallow drawdowns as well. So it's not. That's probably a property of a bull market is low drawdowns.
And then
a perfect example is 2017 is a great example.
I think we got maybe 5% correction that year, or 5% pullback that year, maybe.
Yeah.
That was the year that short VIX was the popular trade. You remember that? It was the trade until it wasn't, until SVXY blew up and all that.
That's right.
Yeah.
All right. So average drawdown, 14% a year. We've had what, 4%, 5%?
It's about 5.5. I think it is at the moment. Yeah.
All right. All right. What else?
Look, I mean, the bulls are there at the moment. If you go to slide 3. This is one of the sliding scales that I do. It's just a 52-week range. Obviously, all the bulls are at the moment. If everything's on the right-hand side, it means there's a lot of bulls. And that's where it's been and has been for quite some time now. It hasn't moved too much. I mean, the blue is current data, and 1 month ago is the orange triangle, the grey triangle, sorry. So you can see that there hasn't been much movement. Bulls will be bulls. And bulls can stay bullish for a long time.
So you don't look at something like
feature.
So all right. So you would interpret this more as this is bull market trait to have optimism rise or hit extremes like this. Some would look at it and say, is sentiment getting frothy?
And if you go to the next chart, which is another great example of board here, JC showing this chart as well. It's right on that. Like, I've done the back testing and all the data behind it, and when it does hit into that, it normally the forward returns aren't like crash hot. But as you can see from the data, if you go back to after like 2021 sort of period where the bull market was going through the roof, you can see that it hanged out at that area for a long time. So bulls will be bulls, and they'll hang out at bullish ranges for a long time. But when it does turn, it could become a headwind for stocks.
Bulls will
So
be
that's just
bulls.
something I'm keeping my eyes on at the moment. It's at extreme ranges, and when it's at extreme ranges, my eyes light up because that's what I look for.
And the last time we were down here, we did have a big correction. That was summer to fall of last year.
Yep.
What do you think, Pat?
No, it reminds me of that quote. I don't know who it's by. I could go back and look, but that like the public is often right during the trend. It's just the ends of the trend where they're usually on the wrong side of the boat. But I don't think we're there yet. I think you guys would probably agree. I mean, definitely let me know if you don't. But I don't think we're seeing those red hot signs of optimism. I know Caleb Franzen had shared a chart yesterday. It was just a chart of the CNN Fear and Greed Index, and that thing's nowhere near greed. So, and that's not a perfect indicator, but
No indicator is perfect.
Right. Here we are, Nasdaq's printing all-time highs 5 days in a row. You'd expect sentiment to be a little bit more frothy than it is, but if this was a top, right?
You'd want to see it spike. You need that weak data of it's like everyone's bullish, and then that's sort of like, all right, something's going on here.
Yeah,
definitely.
And it felt a little bit cute, like last year, to fade some of those magazine covers that we had, like some of those early bullish ones, because it's like we're coming from a place of historic pessimism, right? Where if you look at some of like the moving averages on those AAII numbers, those got to really, really low levels.
So, but I mean, if you go to the next chart, if you're looking at some cycles and seasonality work here, we've got election year, and it's been the best one going back to 1950. So this year's been great. Like there's nothing stopping it at the moment. But if you go to the next page, it's probably more to what I'm looking at.
Wait, hold on.
Actually, the next one chart more. Actually, slide 7.
Make it full chart, full screen chart.
So this is just the average of all those lined ones that I showed you just before. So I just wanted to highlight this period of like September, October, November is everything's suddenly lining up together. So we've got all these bulls. Will they have a break? I don't know. But seasonality saying usually in an election year between September, October, November, we have a bit of a rest period. So I don't know. What do you guys think about with seasonality and election cycles? How much weight do you put towards it in your process, I guess?
I like this. I think this is important. I think it's important to know. You could go back to our faces. I think it's important to know how well the market tends to do, right?
On average.
But even though it does well, you still get that kind of period of anxiety right before the election. And then you get that kind of sigh of relief after, where volatility comes out of the market. Obviously, that
people
doesn't
know what's going to happen. So people become comfortable.
Right.
Go back to the analog with the current trend, because we're pretty much tracking it now.
Yeah, slide 6.
Where's this year though? Oh, okay.
This year's the red one, so it's been the best performing year. If you go to slide 6, you'll see the average and this year. And
there it is.
Oh, okay.
Yeah. So
I don't know. Has it been too good so far this year? I think a nice period of sideways for a couple months, something like we had last year, would be just fine. But with breadth the way it is, I'm kind of leaning in the opposite direction. Breadth expands. Maybe the mega caps, the large caps don't do as well. Maybe you get a sideways S&P 500, right? But beneath the surface, things are raging and getting better.
Right.
I think that's a possibility, because there's that. I mean, JC says it's a rotation. We've had the larger caps, the larger of larger caps performing so well. They may need some time to digest their recent gains.
Stocks like
and then
Apple,
they might rotate
Nvidia,
into some other stocks.
they've been so good. They deserve a little cool off here, right? And if they were to cool off, God forbid, correct for a couple months, it'd be tough for the indexes to be marching higher. Maybe we get that little corrective period and it looks something like that. And then go back to the nope. Yeah. And then we rip into year end.
Yeah. I mean, that's not I'd be happy. I'd be happy with that. Like, I mean, we've had a stellar 2024 at the moment. I'd like to see some sort of correction, some sort of digestion of returns. Like, you can't just keep going up in a straight line.
Well, to bring it back to your first chart there, it would almost be unusual if we didn't see a bigger drawdown, right? And we walked out of this year with the kinds of gains that we've seen so far, right?
Yeah, totally agree. I mean, there's so many different viewpoints that I'm looking at different things, and I can make it. And this is where I find it interesting is I can make a bearish case and I can make a bullish case at the moment with data, with specific sets of data. I can, another example of if you go to slide 8, I've got a risk, long-term risk on, risk off indicator here. So it's got 20 pairs, and it's a bit of math behind it. But essentially, what this is saying is the risk on side of things has been around for 2023 to 2024, but of late it's been weakening. So that's something to watch, and that ties into everything else that we've just spoken about. Like everything's extended or thereabouts. Here's another great example of, if you look at the line, it's sort of catched most of the return. Like it puts you in an environment, and that's what one of the biggest things I look at is what's the environment that we're trading in.
Do you care more about divergences here or simply whether it's in the on or off range, though?
I like to give it a mix.
Yeah.
I like that it's in risk on. It's what probably would it alerts me that there is a divergence. What would probably make me go, I'm thinking about this a bit more if it does cross over into the risk off. I'd weight that more heavily than just the divergence, because the divergence can last for a long time, as you can see already. It's already been a long time. So I like to point out the divergences, but would I trade against them or change my portfolio on a divergence? Probably not. I'd like to see price and some sort of action.
Interesting seeing how this dips into risk off range, like during the corrective wave last year.
Yeah.
Before just dipped into risk off range for a second. What drove that? Do you know?
A lot of, if you look at a lot of these ratios, they all fell off there a little bit. So it's right. I like this sort of indicator that I've created. I've done some obviously back testing and number crunching behind it, and it sort of catches the right environment and the trend. Obviously not everything's perfect, but I like to put multiple models and multiple sort of indicators together, weighted the evidence, and then use that. That's my sort of process, I guess, at the end of the day.
So speaking of something that is okay but weakening, talk to me about these new highs or lack thereof.
Lack thereof, yeah, definitely. So new highs, they're not there. They're definitely not there. There's nothing more you can say about that. The stocks are not making new highs. If you look at sort of some of the data that we look at every day of new highs, you're getting a lot of the larger cap tech names up the top there moving, but the new highs, this is short term. This is 1 month over the 500, 400, and 600 S&Ps. So, but they're not there. So, but more importantly, is the next chart is that we're not seeing an expansion in new lows.
I was going to say, I hope you brought the new lows.
That's the key here, I think. If we're not getting an expansion in new lows, let the bull market continue on, because it's mathematically impossible to go down if you're not getting new lows.
Yeah.
or an expansion in new lows. So,
well, back to that last chart of the new highs, I thought it was kind of interesting that you're seeing that deterioration and the divergence across all the caps. We talk about how strong large caps is, but they have they're dealing with that same divergence that the others are dealing with there. So,
yeah, it's a little bit more. There's a little bit more, fullness in large cap, but it's still, weakening across the board. So,
yeah.
So small caps, you would think a lot weaker than a large cap universe, but it really looks the same here.
Yeah.
If you dig into the data, like I do, I'm all about getting into the data, and you look at small caps when you get to the nitty gritty of it is looking pretty bad. That's where the majority of weakness is coming from. And then obviously you move up to mid caps, and it's there is a bit of weakness, and then large caps, like you get the S&P 50. That's where you want to be at the moment.
I mean, this has been weak all year. These readings were pretty weak last year, outside of the run up in Q4. I just think the cycle can't end, and we look back and say, "Oh, barely any new highs this whole time," right? At some point, this has to improve.
Improve or weaken. It's one or the other. There has to be one or the other. I don't think it can. I mean, it could. I mean, this is what we were just discussing before. A divergence can hang around for a long time.
Right. It's more of like a condition than a signal, right? More than something that.
Yeah, an environment.
And lucky for us, we don't have to buy the ones that aren't making new highs.
And that's the caveat here is like, I look at all these charts, I look at all these environment indicators that I've created, but at the end of the day, you always revert back to price, and you use relative strength, and you use trend and momentum. Essentially, this is just a great way to visualize what is the trading environment. Is it time to be putting capital to work? Is it not time to be putting capital to work? So that's the way I look at it. I mean, I always end up back at price at the end of the day. I'm looking at the chart. Is that chart, up and to the right? If it's not, I'm probably not buying it.
Grant, I look at a ton of different charts all day on Twitter, but I always like yours because they're different. They're not always just the price charts. It's almost like more like data visualization than your classic charting and technical analysis. And it's nice. It's good for context. We all know that market's up 70% of the time, things like that, those kind of vanilla stats, but it still helps to know what doesn't happen and give you context to what normally should happen when you see the market behave a certain type of way.
And I can spend time doing this because the All Stars charts team is all looking at the charts and the prices. So I can bring my what I like to the game, and they're bringing all the price charts to the game. We can mix it together, and we get something awesome at the end of the day.
Guys, we got Kenny Glick waiting in the green room to talk to us about whatever $10 million market cap stock he's trading today. So let's do this. You know how to do it, Fonz? Hit the bumper.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Poof. Love that, man. So
What's
good.
up?
All right, what are you trading today, buddy?
Wait, you want to talk about when the market's going to possibly go down, or you want stocks to go from 2 to 12 to 15? What do you want to talk about?
I thought the breath stuff would have bored you. I was right.
Let me tell you. Let me explain what you want to do. You want to take a $100 bill every day, right? And you want to bet on the Qs. So if the Qs are slightly down, you know they're not going down. Put $100 on some in the money calls. If they pull back for 7 minutes, you know they're going up for about 7 days. Put another $100, couple $100 on some outside calls. And if they pull back for a day, we're going up for 3 months. All right, there's the ratio. So if we actually pull back for 1 day, what's the difference? We're going to go up for another 3 or 4 months, and then 3 more years. QQQ 715. I'll see you there. All right.
You're not wrong, my friend. but how long can this last? Like the Qs are great because the Mag 7 stocks are up every single day and they're the best stocks in the market. We talk about how breadth is bad and 10% of stocks are making new highs. You don't have to buy the other 90% that aren't making new highs. And really,
but you just keep buying the same ones. Everyone's complaining about it. I have 80-year-old men who cashed out of the market when the Qs are around 385. All right, my dad and his friends, they're like, "Ooh, 5%. We can get 5% for free now." They're debating whether or not to take their money out of the 5% and put it right back into the Qs.
Yeah.
So there's no debate here. People are still waiting to put money to work. Forget it. The correction. We can't even use the C word anymore. But anyway, listen. You want some $2 stocks that go to 12? I gave you the Zap, right? Now all the kids are talking about it. That one's done, right? Then I gave you Jumama, JMIA. Look at this chart, baby. Come on, JMIA. We've been waiting for 3 years for this move. We finally broke out. If we could sustain something above this $10 spot, I'm going to go to. Now listen. I've learned my lesson from Joe Battaglia. I don't know if you guys remember who this guy was, right? No shame. We're never going down, baby. Every stock's going to 1,000. So my new target on JMIA is 640. All right? Seriously, look at this chart. But give me 1750 and I'll like it. But look at this. There you go. Look. Boom. You got it for me. We finally broke out the $10. We hold this 975, 1050 area. Where you going to go? 1250, then 15, then 1750, and then bang, we're off to the races. But we got, go ahead, baby.
This stock traded at almost $70 a share in early 2021.
Right. Now, this is not going to be another one of my Carvanas. Carvana was special because the stock was 300 and change. It got smacked down to the 5 and the 7. There was these massive gaps between the 56 and the 75 and the 96, what got us to the 120. But our Jumama here looks like he got an easy 1750, 1850 on it. But, for the action this morning, you got Longview, baby. LGVN. Have you seen this one? No, I know. I'm going to scare you with this one. LGVN. Take a look. It's ripping all over the place. Remember, most of these were done before the day begins, and then we go back to the Qs and crushing UVXY.
So Longeveron, it's up 125% this morning. Is this a short interest stock or is this moving on like biotech news?
My man, it's the same story every day. There's a little news catalyst that gets these things going. The squeeze begins. You try to milk them on the upside, but then I usually look to see if I can get a borrow on them and crush them right back down to where they're going to go. Because most of these stocks roll over and die. Again, just like that Nicola and that Space. You give me a reverse split, I just wait to pound it right back to where it came from.
All right, so Longeveron.
Yes.
U.S. FDA grants, blah, 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 regenerative. I don't know what these words mean. Designation for the treatment of mild Alzheimer's disease.
Yeah, there you go. I have onset Alzheimer's, so, maybe this will be working for me.
And the Jomama was up 30% yesterday on no news.
Well, there was an upgrade. That's the only reason that I'm not a big fan. I want to see the upgrade Euphoria consolidate. And like I said, if you consolidate above the 975 area, I really do like that name. That's actually a retailer. And again, I don't think we're going to go back to all-time highs like a lot of those, Kathy Wood, moment stocks, when everything was ripping like the Rokus and the Zooms. But, give me 1250, give me 1750, especially these in the next couple of days with some weekly options. That's where we're at.
How do you find these? Like, are you just looking for momentum in the pre-market and that's how you spot something like LGVN?
Yeah, well, these are just volume risers, and unusual volume meets percentage gains. And there's 3 or 4 of these every day. And this used to be, 8 o'clock in the morning, all this would start. Now these are raging from 4 o'clock in the morning. So when I wake up, there's there's usually 5 or 6 of these to choose from. And again, let me just make sure everybody realizes these are garbage. These are not, you don't want to be involved in swing trading on most of these. Jumama is a different story. GemIA, that's a different story. But when you're trading these things, you're in it for the action. This is the casino, baby. That's why you're here. The casino never closes anymore. So, you try to do as best as you can. And I like going back to those names and just crushing them, like an MULN. Come on. Every once in a while it wakes up and you know you're going to crush it right back to where it came from. They're just awful, awful stocks that have no business doing what they're doing, but you can have fun with them on the long side and then just realize crush them within the next couple of days.
All right, listen, the chat kind of likes you. Some nice comments here. Kenny, where's your stop on JMIA? Billy's asking.
Well, right now I'm looking at, if you could believe this, I'm thinking of buying it, put it into the portfolio again. Give me a pullback today to like 950 and we'll start talking. They have some really cheap options out there if you want to go out 3 or 4 months. But I'm actually looking to play this to think if it could sustain something and shock us with another big day. You got weeklies on it. I'm looking at 1150s for maybe 30 cents today for Friday. That's the gamble. And then after that, again, above 1121, we're looking easy 1250. So I want to give it some time. So again, yeah, I'm really looking at this, the Jumama as a serious buy and hold, which is not my thing, but I do dig it. But today's action, we're sticking with the Qs. We hit the 500 right on the head yesterday. You found the sellers over there. Probably just going to break right through it today. But if we see a double top, give me some UVXY not trending down every single day, and maybe we could short. And don't forget, people, I'm the ex-perma bear president. I'm waiting. Give me a reason to think this market's going down, and I will pound it with the rest of you. I know you're all just waiting, right, for that correction, that elusive correction that's going to last for 7 or 8 minutes, and then we're just going to rally for the next 3 to 5 years. So that's where we're at. That's where we're at. So, baby, join me in the room. You want to make some money? I find $2 stocks that go to 10 almost every day.
Thanks, Kenny. Talk to you tomorrow.
Yo, be good, people.
Bring back the boys. There he is. There he is. I mean, he's like a shot of espresso in the morning.
To his point, he's been bullish on the Qs for quite a long time, and they've definitely performed, haven't they?
Some real market wisdom there. Just keep buying the Qs. I gave a presentation at the Money Show a few years ago, and someone got pretty upset. We were talking about value stocks, cyclicals. We were talking about commodities and things. The person got really upset. They're like, well, why not the Qs? Why not just the Qs? Like, that's all you need. And I'm like, I get it, right? And the way that growth has outperformed value our whole careers, like, that's what people know. It's the Qs. It's always the Qs. It's never not going to be the Qs. That's scary. One day it won't be the Qs. I don't know when. I don't know for how long.
I mean,
no one will be ready for it either.
No one will be ready. No. I mean, you see wrinkles of stuff going on now with the big banks performing the way they are. Industrials kind of got to get up off the ground here, start working again. Materials have been no good, but those cyclical groups, right? Those value sectors tend to all work together or at the same time when they do. So that rotation out of growth into more value-oriented stuff tends to happen, and then you kind of get flows sprinkled across a couple different sectors. We're just really seeing financials working right now. The other guys,
I mean, from a breadth, when you're looking at breadth, you can visually see that it is financials that is is the leadership there in the breadth.
All right, Grant, this earnings chart is just so cool. I'm going to grab it and send it to Fonz, and we're going to talk about it. I like the colorful one. We have a new chat now, so I can't find anything in Slack ever. This is so good. So we took the entire S&P 500, dumped a bunch of earnings data for each specific company into an Excel spreadsheet. Why don't you explain what you did here?
Shout out, Sam.
Yeah, shout out, Sam. Took Sam a day. Like, we manually input all of the earnings and sales numbers and estimates and stuff like that. So throw up this chart. I think we make it green and dark green for and then red and dark red, right? So if it's a double miss, which is shown in blue currently, dark red. If it's a revenue miss, EPS beat, light red, right? So explain what this is. This is fantastic. By sector too, just so good.
Yeah, it's just by sector. We've got, obviously it equals to 100, so we can make it into these nice bars, make it visually appealing. You've got revenue miss and EPS miss, which is the blue. Then you've got revenue miss and EPS beat, which is the red, and then you've got revenue beat, EPS miss, which is the yellow, and then you got the green, which is beat essentially. And we're doing some cool things at the back of the house at the moment with this data, and this is just the beginning. We're going to come out with some cool data and some cool visualizations to look at this data, definitely.
So, Pat, don't look at the chart. If I told you technology did not have the most top and bottom line beats, it was another sector, would you be able to guess what sector?
The more puzzling thing here, and I know you told me not to look at the chart, but I can't help myself. Healthcare. Like, why is healthcare hitting new relative lows if they're beating so much?
I agree. Look at that. So 66. So what we're talking about here is this big green stick in healthcare. 66% of the healthcare components in the S&P 500 beat on both the top and bottom line last quarter. That stands out. And then Pat points out, well, XLV is making new, decade-long lows on a relative basis, right? It's very bad.
Yeah, something like that.
Very bad.
So I don't know. Another one that stands out is industrials, looking pretty good here from an earnings standpoint. Defensive, but that's no fun. Consumer cyclical looks all right. And then look at all that red in utilities. That's no good. What happened there? So they're all missing on revenue. Oh. I guess it wasn't the AI stocks. It wasn't the AI utilities. All right. This is fun. So we'll continue to do cool stuff with this as we have more and more data. We just have 1 quarter for now. We could go back, try to get more, but I think by this time next year, we'll have all sorts of time series charts with earnings, results, surprises. All right.
We're going to come out with some fire charts. Definitely.
All right. What else you guys got?
Oh, man. Steve, can I put my bear hat on?
Put your bear hat on.
It's been a while. I got to dust it off.
So Patrick is saved in my cell phone. As
Am I still in there?
Yeah,
you're still in there as Perma Bear Pat.
Yeah, I like it.
You guys gave me so much shit for getting bearish. I got bearish early on crypto in the last cycle. You know how it kind of double topped?
Yeah, you were.
I got bearish into that first one, and it was hell. You guys gave me hell on that second one.
Yep.
It was tough. It's really tough to go against, especially people you respect, your friends, things like that. That's what makes it really tough.
So what is making you feel like a perma bear today?
Do we got the slides?
I think so.
And just to be clear, I'm definitely not a perma bear here, and definitely not super bearish here, but it's definitely something that definitely is a red flag here. We're hitting the 161.8 extension, the Fibonacci extension on the S&P, the Nasdaq. On the semiconductors, we're hitting the 261.8 extension. And then semis on a relative basis are hitting the 161 extension. So bottom line is some of the most important charts are hitting their upside targets here. So this would be a really logical place to start slowing down. Who knows if we have to correct sharply or if it's just, a multi-month or multi-week consolidation here. It's definitely something that would make sense at this point, right?
Targets are being hit, not just in tech, right, but in the tech subgroups. I think the most important one here is the bottom right. That's a huge price target, right?
Yeah.
That's a 20-year base breakout. It's measured out. It's hitting its first Fibonacci extension already. Kind of says, okay, maybe that was the move. But if you look at equal weight tech.
Well, so keep going. We got I got a couple other things I was looking at in the bottom right. The other 3 charts are the same. If you hit the next one. Here's SOX. This one's actually breaking out here. So, and Steve, do you know what the major differences are between SMH and SOX? I know NVIDIA is a lot heavier weighted in SMH, but
one of them has international and one of them doesn't, I'm pretty sure.
Oh, okay.
One of them doesn't have the Taiwan semis and ASMLs, and I'm pretty sure that's it.
And, these ones have been a great leading indicator for the broader market. So this is one where I'm like, okay, maybe NASDAQ and S&P can just sail right through this. Although with stocks there, you got the correction when it initially hit the 161 extension. Looks like it did correct. It's probably at least 10% there. And then what do we got next? We have tech next. Yeah, so tech also making it, looks just like stocks there. So encouraging sign from tech there that it's able to just go through right like that. I mean, biggest sector in the S&P, so maybe there's a chance, right? But then go to the next one.
You know what we see a lot with that though, Pat, is the SMA. Look at the lower left. Sometimes you blow right through that first fib, right?
Yeah.
It's not resistance at all, but then you find later, oh, it's actually support now.
Right, right. So, I mean, it ends up coming into play, even though it didn't behave how you might have thought. So maybe that's totally a scenario that we have to be ready for too, right? We just blow right through and then maybe you get the retest. Maybe that's your entry point, right?
I am so naked short puts in home builders, and it's not working, but it's not working enough to stop me out. So I'm just sitting there holding these shit positions that are just like slowly moving against me. They're in the money at this point.
So like with this one, those two groups on the bottom, are the S&P and Nasdaq, are they going to resolve like semis where we rip right to the next one, or is it going to be like home builders? And if you go to the next one, Alfonso, it's just ITB. It's just a different home building ETF. I think XHB is more equal weight, right?
All right. So are you telling me something good or bad about the home builders here?
So the home builders, I'm just saying that they paused all year. They've been pausing all year at this extension. So this is just an example of what can happen at this level and how prices tend to behave when you do reach these Fibonacci levels.
Yeah.
So is it going to be like semis or is it going to be more like home builders? And is home builders really a top here? That one is still a question mark, right?
These are great charts, Pat.
That's all I got. That's pretty much all I got. But I think the most pressing one is that semiconductors on a relative basis one. That one is the biggest red flag, I think. And again, I mean, it's still breaking out. The breakout's still intact. It's still trending higher, but logical place to pause. Some of the themes that have been working might, reverse kind of soon.
And that chart looks like it's been vertical for a couple years now, right?
Which one?
SMH SPY. John, last arc, it's just been a straight line higher for.
But we talk about semis being, carrying this market and all that. They just started breaking out of a multi-decade base, right? So this could still be the early innings, but maybe we're at a pause, right?
Love it.
But could be totally wrong. Could just rip right through and completely ignore these levels. That's not what I'm leaning on, but could definitely.
I was actually looking at ITB and today actually, and I was like, I mean, your charts show it perfectly. Is like I was thinking, is because they were leaders, are they leading? Are they showing us something at the moment?
Right.
And that got me thinking. So I went back and looked at a lot of industry sectors and major indices. And I posted a table on Twitter just about an hour or two ago.
Oh, nice.
When you go back and look at 52-week highs, a lot of these sectors and industries had their 52-week high a couple months ago. I mean, there's semiconductors and there's Qs that are all going out to all-time highs or 52-week highs or whatever you
right.
want to put it. But there's a lot of industry groups and sectors that have peaked 2 months ago.
Yeah.
And are looking a lot more like ITB and those homies.
Yeah, the homies. Yeah.
The homies.
Yeah. That's a confusing thing because before last year, semis and home builders, two economically sensitive groups, they were rallying together. So they were sending the same message. Right now, they're sending kind of different mixed messages here. So it's like, okay, which one's telling the truth here? Which one should we listen to? And that's kind of the question mark here, right?
And that's exactly. I mean, we're looking at exactly the same thing, and that's why I like to use the way that I look at the market and using these environment and using that weight of the evidence approach because it can give me the. I mean, you can, as I said earlier today, that there's so much data that you can put your bull cap on, and there's so much data that you can put your bear cap on at the same time, and there's so much, at the moment it's a bit messy. I mean, you look at trends, and a lot of the trends under the hood, a lot of trends are starting to break down. Like I brought another breadth chart, which is slide 11, Alfonso, and this is just the 500, 400, and 600. They're moving averages, so the 50-day is greater than the 200-day average, and they've rolled over. So that's meaning there's less uptrends happening in the market. Once again, this is another divergence that you're seeing.
I want to see an updated version of the traffic light chart you had. You remember that one?
I've got that. Yes.
I like that one.
It's been hovering around. There's not much change there, actually. There's not much.
I've never seen anyone like present the data that way, and it was really cool.
It was pretty cool.
This is fascinating because this begs the question: are small caps always worse? Right?
Yeah.
Look at these lines. What I'm saying, the fact that the red is always below the blue, bear market, bull market, any day of the week. Breadth is worse in small cap world than large cap world. This is what that chart shows you.
I mean, at the end of the day, if you are performing in small caps, you get bumped up to mid caps. So, by theory, they're getting rid of their best stocks.
Who thought it was a good idea to kick out the best ones? I guess there's no other way to do it. But man,
it's like a reverse momentum strategy, right?
Yep, 100%. Christopher Brown is saying the Hindenburg omen.
Oh man. Well, no, Grant, I was going to mention.
I just put that out on Twitter, actually.
Oh man.
I don't use it in my system. I was just going through breadth charts and saw that it triggered. It's a bit of there's a lot of signals in there, but I just thought I'd put it out there because I saw that it triggered. So
I think the last two ended up working out, right? So it's on a hot streak right now, but longer term, it's not like right.
I don't think it's a great indicator.
What is it, Grant? What's behind it? Roughly, what is it measuring?
You've got it's the MCO, which is Macallan oscillator, that needs to be negative. It needs the price to be above the 50-day average, and you need the new lows and new highs of the NYSE both to be above 2.8 of the total issues, which is what it is at the moment. So that's why it's been triggered.
Did Tom make that indicator, Pat? Do you know?
I don't know.
That indicator's been around for years. It's one of the old school ones. A lot of people, there are a few people on Twitter that publish it religiously. I haven't done the work to make it part of my process, but I just thought it was interesting that that it has been triggered. I mean, because I'm looking at these breadth charts and I like to give you those sort of unique.
No, I love it.
There's so many different ways to slice and dice the data. So
yeah. I mean, you pretty much code in all of those breadth indicators too, and you don't weigh them any more importantly than the breath work that you're doing anyway. But you're tracking the Whaley thrust, and what's the other one?
I've got 101. I got a book.
What's your favorite thrust?
Yeah.
What's your favorite thrust? You got one?
The 20-day. Okay. Which,
I like it.
Shout out Renmac. They did the work, and I went back and had a look at the work, and I did the work myself. And that indicator, the 20-day indicator, which we are actually still in that breath thrush regime.
And that was an early way out too.
Yeah,
right?
yeah. So that triggered in December. So actually, that regime lasts a year. So we've got a bull market thrust regime till December essentially as well.
Man, it's amazing how quick you can forget some of those really, really noteworthy stats, right?
Yeah. So look, the thrust before that was it got slammed on Twitter. It didn't, you know, because the
Right.
market fell straight away. So everyone that posted it
right before the summer, right?
Twitter trolls were coming out and slamming you for posting that. But like,
Or-
if you go back and actually look at the data, it ended up being positive as well. So it didn't actually harm the stats data from that. So I love that. That's actually part of my process. I use that as once again another environment. You know, I use like 4 or 5 different models, and that's one of those models that I use that gives me an environment that I'm looking at.
Somebody in the chat's asking, Mark in the chat is asking for you to just elaborate on the 20-day thrust a little bit.
Oh. So essentially, it's just, you know, S&P 500, and you want to see that go over 55%. Once it goes over 55%, essentially the forward data, when you forward it out, the returns are they're above average. They're above average, so it puts you in an environment where it's favorable to be allocating capital, and that's where we've been, and we've been in that environment since December. So it's caught literally all of 2024's run up in the S&P 500.
Wait, what's the exact criteria for it?
It's just got to trigger. It's just got to cross 55%. So 20-day highs.
Okay.
It just needs to thrust above 55% of this.
And that's why it tends to be kind of early, right? Because you're going to get that thrust probably pretty early on. That 20-day.
Yeah, it's 20 days. It's
real sharp. Yeah, that makes sense.
I mean, we go out as well, and we've made there's other ones that longer term and like and not it. You can't find the perfect indicator. If I found it, I probably wouldn't be here talking to you guys. Like,
I hope you would.
You'd be out making money with it, but like you gotta. And this is where it comes back to, like, you need to put all the components together, all the weights of the evidence, and use like that environment. That's the way I look at the market.
Well, Grant, you're sitting here talking about breadth, and we've all heard so much about breadth. And it's interesting that you're hearing it from a lot of non-technicians. And I don't mean that in a bad way, but I think it's interesting that you're seeing the least experienced people talking about breadth when the most experienced people aren't really concerned in the same way that the media or general consensus is right now. I didn't hear you mention at all that some of those really popular stats right now, like 10% of the S or whatever. Top 10 stocks is attributable to whatever, over half the gain, all those classic stats we're hearing. What do you think of when you're hearing a lot of those kind of casual breadth commenters?
I look at it and go, cool. It's cool.
Well, are they wrong? Because I mean, it's not bullish to see a lack of participation, but
what does it mean?
Do you think they're maybe putting too much emphasis on just that?
They're putting too much emphasis. It's at the end of the day, you just need to look at price and what's price doing. It's breadth's a great tool, but it's a tool. It's not going to give you that signal to allocate capital.
You're hearing a lot of those
other components and make that way to the evidence sort of toolbox that I've got, but to say, okay, you're going to be buying financials, it's not really the tool the way that I use it, essentially.
Well, and it's a lot sexier to talk about something being, the worst or at the lowest level since 2000 or 1999 or 2008 than it is to talk about that 20-day high indicator that you're talking about. It's people forget really quickly. And that's where a lot of the breadth work you guys do is like, okay, we got the signal early on. We don't need to stress about breadth. Obviously, keep a close eye on it, but we don't need to be looking for breadth to give us the signal for the top immediately, right?
Yeah, breadth's not going to give you the top of the market or the bottom of the market. I mean, it's a great, you can use it in certain ways, but at the end of the day, you just got to look at price and what's price doing.
And I got one more question. So Steve mentioned this the other day really quickly, but he was talking about this concept of a fall day, right? We talk about breadth thrusts all the time and how they can kind of kick off a bull market, but somebody asked a great question in Spaces. There was like, is there something like an anti-thrust, right? And Steve kind of briefly touched on fall days, but do you want to explain that more? And have we seen one?
Shout out Mike Hurley. He's the man. He's the man that brought this to my attention and Steve's attention. Going back many years ago, and I've actually put that process. I don't actually have a chart of it at the moment, but it's essentially it's got like net new highs minus net new low. Net new highs essentially. So it's new highs minus new lows. So what he's saying is a fall day is an unusual spike of new lows. And that's what we were talking about before. We're not seeing that expansion. So it's not triggering that fall day essentially, because the fall day is a part of the weather system, the season essentially. So you've got like summer, you've got spring, the fall day is like, okay, sit up, start watching what else is happening. And Mike likes to use a lot of like ratio charts to, show you that what's not something that's already turned, something that's like leading the way lower. Like that could be that culprit that's going to lead the market lower.
Like any of this, supporting data or evidence that we use, breadth, that fall day, right? Then what Mike does, he says, okay, the fall day is in. Then he looks to price to confirm it. It could take weeks, it could take months, right? But he looks to price for confirmation. Always with any of these indicators. Then you got to look to price.
You got to look to price.
All
That's what a lot of people forget. And a lot of people that, throw out those, bizarre breath stats that they do on Twitter just to get the attention. And that's what it comes down to. A lot of those is just for the attention. Is for the likes and the retweets, essentially. So,
tweeting stuff like Hindenburg omens.
Once things happen, you got to go look at price and where that's leading you.
Listen, Grant, this has been awesome. Thank you so much for staying up late to hang out with us and talk to us about some of these breath charts. We'll have you on again soon, buddy. Go get some sleep. We're going to run the hot corner. Christopher Brown says you can't do 20-day thrusts if you have weak hips. I would agree.
No, you can't.
All right, that's awesome.
I appreciate it, guys.
Run that bump.
I appreciate it. Appreciate it. Thank you.
Man, he's got great charts. And like
so hot right now.
Twist Biosciences. So these guys, I guess, store like cloud data in DNA molecules. Twist Biosciences, Artisan Partners filed the 13G. This is not an original filing. It's not a new stake, but they did increase their stake a bunch. So you see that, Pat, 6.4 to 10.4% of outstanding shares. This one looks as good as anything in biotech, in my opinion. I love this chart right now. I think you can play it against 55, those summer highs from 2022. I think you could use the VWAP if you want to jump it. That comes in a couple dollars below the current price, around 48. That's the VWAP from the old all-time highs. If this one completes a trend reversal, right, and starts moving higher, I think we get back to those old all-time highs. So I think this could be a four-bagger.
Steve, you said that looks as good as anything in biotech. I disagree. I'd say it looks better than anything in biotech.
I mean, biotechs have not been giving us these beautiful bases that we've been getting in other sectors and industry groups, right?
I wish they would.
Yeah,
I wish they would. You remember that 2015 biotech bull market?
Oh, it was great.
It was really 2013. Yeah, 2013 to 15.
You're really dating yourself, sir.
Ah.
Pat's like, you remember the .com bubble?
I remember railroad stocks.
Throw the table back up. There's one more. You seen these couches, the love sacks?
No, but I've heard you talk about them. What's the deal?
Nobody. You're not paying attention to them. They're very cool couches. You got to Google it. They're very cool couches. I'm interested. And this one also has a base that is shaping up, but not quite ready. We did not bring the chart, but it's just ranging. I think maybe it gets ready and completes that trend reversal eventually. We got a shelf of highs that's dealing with right now. But that purchase stood out as well. That was an original filing, right? So that's a new position for, I guess, Anson Funds Management. And then I guess we got to say it, GameStop, Larry Chang, Piker purchase, GME. 100,000. So some decent activity this morning for the hot corner. You like any of this?
I like that Twist Bioscience. I know you've been stalking that one for a while. The others GameStop for sure, but the others I really don't recognize too much. I haven't seen them, but I like that. I like when I see names that I'm not too familiar with.
Yeah.
They don't always work, but at least you know that they're not a crowded trade, right?
Dude, look at GameStop right now. I mean, this thing had, a really, really wild May and early June. And this is tight now. This is just really coiled up here. Bands are squeezing.
Yeah.
AMC too. I mean, AMC trading like it got acquired for $5. These are just some really tight ranges in stocks with really, really hefty short interests. I don't know. How about these solars? See, SunPower got killed. That has the highest short interest, I think, in the market right now. Nova is another one. Look at that base in Nova. We're going to do a new freshly squeezed report. I think we're getting new short interest data like today or tomorrow. So we'll have a report on the blog soon. They keep running some of these heavily shorted stocks, but it's like one at a time, right? It's not like all of them together. So something to keep an eye on. Also, we had a question about Snapchat in the chat. I love this base. I love the base in Snapchat. Very long. Again, lost money on this one, Q1.
You know what's funny is between those 2 quarters, there's like an island of price action, like a 3-month island. And then it gapped down, I think Q1, and then you just had all of Q2, then gapped higher again.
What do you think changed so much in the quarter? So the market hated it first
perception
and loved it 3 months later. Okay.
But it's just such a funny looking chart. You know what I mean? It's just got 3 months just hanging down there.
This is a trade for me. I want to like it more and longer. Maybe I will. I probably have to go back and listen to the earnings call. I listened to the one in Q1, and I was very put off by some of the CEO's comments.
Is Evan Spiegel still running that?
It's him. It's that guy. Yeah. Not a fan. We'll give him another shot. I don't know. Because a chart like this, right? If this reversal is in, this is the chart pattern that we've been buying this whole cycle. It's been very good to us, right? So
yeah, and I know you're probably seeing it too, but that gap, that gap fill that it's knocking on. If it breaks out, it's like that's just a volume pocket. It could fill that really quick, is what I'm trying to say.
Yeah, I'm marking up the chart now because you got the VWAP coming in at the old all-time highs too. It looks fantastic. Looks really good. You're gonna get involved?
This is definitely a really nice setup here.
Here, let's see. So I did the risk reversal on this one. Feeling kind of crazy.
Feeling pretty frisky. Is Paramount? That's not a meme stock, is it?
I think it's a fair question.
What is a meme stock these days?
I really don't know. That we need Spencer here to answer that question. I think the conversation that we were having yesterday on Spaces was valid about Reddit. I think Reddit, if it's not a meme stock, it's like, well, how? How is Reddit?
Right. Very memeable.
Yeah. Snapchat. All right, so it's a slow news day. I looked through the feed. There's really nothing going on. Some big upgrades. Apple, Eli Lilly. Honeywell bought like a $2 billion liquefied natural gas business. That was interesting. They upgraded one of the Bitcoin miners, that Cores, CORZ.
What's the group doing?
Crypto's really doing nothing. Dug in the other day. Now looks like more indecision at these key levels, but not tops.
Yeah, and it's not following through to the downside. It broke a pretty important level over the weekend, and it's not following through to the downside. If anything, it's trying to reclaim it. I'm talking about that like 50, call it 58,000.
Yeah, I was telling the guys in the analyst meeting last night, you don't want to draw the support line too tight. than
No.
primary uptrends. You know, like I'm with you. I think you redraw it now at the intraday lows from the other day. Look, ugly so far today. It looks like Pat ran up, kind of tested that 60 level, flirted with the idea of reclaiming it, and now it's selling back off. So we'll see. The day is young.
Flirted with the
These
idea.
things do trade. What?
I like
What'd you
how
say?
you described it. Flirted with the idea of reclaiming it, but didn't actually do it.
I mean, there's still a lot more time. That it's easy to forget sometimes when we're talking about stocks all day. These things trade 24 hours a day, 7 days a week. So, all right,
Steve, I'm surprised we haven't talked about the financials yet.
I got charts. I got financial
Yeah.
charts.
I knew
We
you
got
did.
to bring on Mr. Sean though. Sean woke up nice and early to join us as well today.
Nice.
What a special treat! What a show this.
Look at this. We got the B team together. This is wonderful.
Yeah. It's crazy that they let us do this, isn't it?
It is. It's nuts.
What's
up, dude?
happening, fellas?
You like the Snapchat or no? Throw up the snap.
I like the chart. I don't like the product, but yeah.
Oh.
Hey, Sean, I saw you the other day. I was salivating over that wheat and precious metals chart, and then about an hour later, I get on Twitter and I see that you posted it. I was like, I like when my smart friends are agreeing with me. You know what I mean? I don't like when too many people agree, but
you can credit your friend Steve Strazza for that idea. That was all Strazza.
I should have known.
Pat, do you remember when it was silver wheaten?
I do.
Oh, okay. Why do they do that? Why do they gotta change? Why do they gotta confuse people like that?
Well, pretty soon it's probably going to be Wheaton AI blockchain. So get used to it.
No, so apparently the narrative is silver is an AI play now. Have you guys heard this?
Oh.
I'm not kidding. I heard it yesterday.
So silver is in the chips or something, I'm guessing?
This metal that is older than Jesus is now an AI play.
Older than Jesus. That might be the first Jesus reference we've had on the morning show in quite a long time.
So that's going to happen to everything, right? It's probably like a tiny little piece of silver is put in these chips or something. And yeah.
Well, I laughed at the utilities thing, right? And how they're trying to spin it as an AI trade. And I thought about it later. I was like, okay, maybe I can see it. But silver, it's like, come on. That's a stretch, right?
Yeah.
At what point do we just say anything going up is AI related?
Hey, sorry to change the topic on you, but this is what I meant to say when it first came on. I wish Kenny was still on with us because the Qs have kissed 500 twice yesterday and very early this morning. And
that's where the fib is.
Is this thing just gonna rip through 500 today? It feels like it wants to.
That's where the fib is.
And I know he'll hate it because he hates anytime the Qs go up. I feel like if the Qs break through 500 while we're talking, we got to bring Kenny back on. He'll be friggin' livid.
All right, we will do that. Pat, you're saying that's where the 161 is?
That's exactly where it is. 500 on the dot, or at least
it's kissed it. It's kissed it twice, yesterday afternoon and then like in the pre-market this morning.
I'm telling you, this is a perfect spot for a reversal. We've gone up 6 days in a row. Super, super light volatility.
See, I'm going to take the other side on that, Patrick. I think that is common wisdom that yes, this is a great place for a reversal, which is why I think we rip 5 points higher from here.
You think it's consensus that people are just looking at the 161?
No.
I think the combination of that plus a big, sexy round number, 500. I think and the fact that it's gone up every day for the last 2 weeks or whatever, I think everyone's looking at that number saying, oh yeah, this is a good place to take some profits, maybe get short. And I don't know, man. I think this thing could rip to 505 this afternoon if we get ahead of steam.
Listen, I had the same logic on like NVIDIA and some others. And when NVIDIA hit its 161 extension, it did consolidate for about 6 months. But when it went to the next one, it like sold off for a day or two, and then it just ripped right through it onto the next one. So, I mean, these things aren't foolproof, just like anything else. But like I said, logical place to see at least a little bit of volatility. And to your point, a nice round number, that would be a perfect place for a bull bear battle to see some of that kind of whipsaw action.
Well, and here's the thing too about the big round number. We talk about $100 rolls around here. The $100 roll phenomenon applies to 200, to 300, to 400, any big round number, right? And what tends to happen, for those of you who are unfamiliar with the concept of the $100 roll, when a stock is, let's say it's at $80 or 85 or 90, and it's approaching 100 for the first time ever, right? That'd be an all-time high, and that level, psychologically, whatever, we could argue about the reasons, but it tends to act as a magnet. But it doesn't act as a magnet and then it stops right there. It tends to overshoot. So it'll get there and then it'll go $4, $5, $6, $7 beyond before you get a potential rollover. I've seen it time and time again, whether it's at $100 or 200 or 300. So I feel like the cues here this time is not going to be different. I mean, we've kissed 500, right? We haven't quite broken it, but if we break it today, which there's no reason why we can't break 500 today, I think getting to 505 could happen in short order. Could happen this afternoon. It could happen, by the end of this week, certainly. But I'd be surprised if it didn't. That's my take.
Yeah, I think what you're describing, totally a likely scenario where it does overshoot. And if it is,
I'm here for it. I'm long the cues. Let's go.
You guys see uranium today?
See who?
Stock's all ripping.
Which one?
Uranium.
Yeah.
Oh.
Oh, wow.
I do see it.
So whatever Powell said yesterday, the interest rate sensitive stuff, really liked it, right? The banks and stuff.
The banks loved it.
The banks threw a party yesterday. And they're following through today. Even the little ones, really good price action. But some of the other groups that you would expect to rally, like metals, didn't do anything. Look at something like XME, right? I thought that was something different.
Yeah. How about Reddit? Is Reddit going to go today? No, it's not going to go today.
That candle finish up yesterday. Have a look at Reddit. Here, throw this chart up, Bonds, and then why don't you come join us when you're ready, and let's talk about some of these international charts.
Are we going to get some Fonz here? We're going to get the quad box with Fonz?
Yeah.
Oh, baby.
Fonz is getting involved. But look at this base. So I got stopped out of my position a few weeks ago because it looked like this base was coming undone, and now I'm going to have to buy it back again. It's just another one of those. But these patterns, Patrick, take time and can really frustrate you before they leave the station.
Yep.
Looks like Micron, doesn't it?
Yeah. Are we going to build a base or a handle here?
Got to build something.
Can you imagine if this thing doesn't work for another 2 years?
We got Mary today too. Oh, this is just so fun. Bring Mary on first, and then Fonz, you'll be the finale.
Ooh. That uranium trade was looking so clean and so good for, multiple occasions. It seems like it starts shaping up and then it just fails, or just can't really get going. But
Sean, didn't you have like leaps on NXE? It wasn't leaps, maybe.
No, I'm not in NXE and I'm not in leaps. I don't remember trading NXE. Hold on.
I thought you had NXE. I thought we were in NXE.
Okay, hold on. We were in it back in September.
Okay.
I apologize. We were in it twice, back in September and in November. Lost money both times.
Yeah. Again, they can frustrate you. All right, bring Mary on. Run the bumper.
Hello. Oh, yeah.
Good morning, gentlemen. It's like handsome alert here on the morning show today. Whew.
No, not till Fonz gets here. Then it's handsome.
Yeah.
That's true. Yeah, big finale with Fonz.
What are you trading these days?
Yeah, so I was up north last week for the 4th holiday up at my cottage in northern Michigan. So it kind of took a lot off, not a lot off the table. I just kind of let the winners go and didn't really trade a lot last week. So kind of getting back involved again today, yesterday. And this is one of the things I love about everything that we do. You guys all have kind of your own different niche, and I have the privilege of being able to see everything that you're doing. And so when I start to see things hitting in one place, and then JC's talking about it on the conference call, and then Patrick's talking about it on the chart report, and then Sean's putting out an options trade, I'm in. So Wheat and Precious Metals, I bought this one yesterday, jumping the breakout a little bit, but I mean, this was a great, for me, diversification to what I'm currently holding, because as you know, I hold a lot of the junky stuff. So this is a longer term play for me. And I mean, the chart, I mean, we can talk about the chart. You guys already have, but yeah, this looks great.
I love that, Mary. I also like that you're pointing out it's longer term, because we don't get to make the chart patterns, but the pattern should really dictate the time frame and how we trade it, right? Sean,
Yeah. You guys are just showing the handle here. If you zoom out even more, I mean, this thing is just the handle of a cup and handle. This is like a 24, 25-year cup and handle here.
Ooh, the monster cup and handle. That's a big cup of coffee.
Big one.
Yeah, you have the monster, that, and then within the handle, you have the kind of this like head and shoulders there. So this thing's got multiple things going for it. And I think you're absolutely right looking at it as a longer term play, because you do have that 24-year base and then a 3-4 year handle, if you want to call it.
This base, hey, listen, this base is so big that our friend, our colleague, Ian Cully, is currently reading a book by an author who talks about this stock and this setup in a book. The book was written, who knows when it was written? I mean, this is how big this base is.
Really?
Yeah. Was it Larry McDonald's? Is it Larry McDonald's most recent book?
I think so.
Yeah.
Wow.
I also just feel better owning this one than some of these junky juniors, right? That you really can't trust. They trade like biotechs. Like, this is Wheat and Precious. We just talked about this. Was also this is one of the big guys in the space. They've been around forever. No?
Are they actually a miner themselves, or are they like a royalty thing?
I think they do. I think they might do both. The chart doesn't look like RGLD or Franco-Nevada, like the pure royalty plays. So I don't know.
Okay.
I think
Dawson in chat writes, imagine seeing a base and saying, I'm going to write a full book about this. To be fair, his book is not about this. He just happens to reference it in the book.
Awesome. That happens every day to me.
All right, Mary, I like it. I also like the idea of jumping it. Like you probably did the same thing at home, but we just dropped a little VWAP from the pivot highs there. We took it out the other day, and we're getting confirmation now.
Yep, exactly. The other chart that I brought along today, same kind of methodology, dropping the VWAP. SMCI, I actually am kind of hating myself a little bit. We'll see. I jumped this one yesterday, right in the very beginning of the trading day. It was triggering.
Hold
I was
on.
getting the alert.
Interruption. Did you guys hear that? Do you hear the bells ringing? Ding, 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 ding. Qs are above 500. There it goes.
There we go.
Oh,
Sorry, Mary. I apologize.
Nope, that's
Please
okay.
continue.
No, that's okay. So, we talked about AMD a couple of weeks ago. That's a trade that I got involved with as we were doing that kind of pinch. And, it resolved above the VWAPs that we had anchored from March highs. SMCI had the same alert basically set at the same VWAP and triggered. I got involved yesterday. It closed below, which I wasn't super thrilled about. And so now I'm just kind of waiting to see what happens with this one today. I see it's down still another %. So I may have jumped this one a little too early. But then, of course, I'm listening to Patrick talking about with his chart and SMH, and we're hitting, the Fibonacci extension. So I'd love to get your thoughts on, am I looking in the wrong areas at this point? I mean, semis have just been so great, and it's the pond that I love to go fishing in, and it's been a huge winner for me. So for this one, I was just looking for the catch-up trade like AMD. I feel like they've got room to go, and the charts look nice. But I'm not real sure about this one, especially after jumping the gun a little bit yesterday.
I don't think you're looking in the wrong area at all, right? Because this thing's been straight sideways for 4 or 5 months now, coming off just rip-roaring uptrend from last year.
Yeah, almost all year.
AMD, same thing.
Yeah, exactly. And been so strong, had a nice consolidation period. And so that's why I've kept these on my watch list. I missed SMCI the first time, never got involved. And so now there's that kind of trader regret of having missed, you know, the FOMO of missing the first move and not wanting to be left out at the second.
Trust me, I get you. I've done the same thing. Pat, we were talking about this on Chart Request Live yesterday, right? I got out of SMCI on that nasty candle.
Yeah, it's tough. That was a tough one.
Dude, you gotta love the way AMD's trading this last week, man. Wow.
AMD
Yeah,
was
really
real
respecting its levels there. But this is how this consolidation resolves is going to be pretty important. If it does resolve lower, that'll be pretty ugly. If it resolves higher, it's off to the races. Probably going to above 1,000 easily.
How important do you guys think it is that the AI stocks remain on trend?
I think it's pretty important.
Yeah, I would agree. Like, you don't want to see stocks like SMCI complete tops.
Right. Yeah.
I mean, that's the risk appetite gauge, right? If the AI stocks are going, then the bull market has legs. If they're not going, then people are pulling in the reins a little bit.
Yeah, I think that's a great way to think about it. All right, Mary, I am officially in all three of these trades with you. I love them.
Fantastic.
Good luck to us.
Good luck to us. Fingers crossed.
All right, Fonz, you ready? Let's talk about Asia. Sean,
Are we gonna go? What do we? This is a quad box. What do we call a 5-person, a 5-header? What do we call that?
I'm gonna step out real quick and
party?
Oh, come on! I want the 5-header. I want to see how this even works.
Can we even do a 5 job?
Does it exist?
Fonz is in the back room trying to figure it out right now. Yeah. Run it.
Hey guys,
Oh, it's just
Morning,
a
Fonz.
4-header.
how are you doing today?
Doing great. How do you think the show's been going? Are we doing okay?
Yeah, I think we're doing great. Busy morning, but
You know, the best part
I'm going to
about
go back and rewatch because Grant and Patrick had just so many charts. Like, I need to go back and rewatch.
great
it because
conversation. Yeah,
so much
seasonality,
information.
breadth. Yeah,
Yeah.
interesting
you know
chart.
the best part about the best part about Fonzie's bumper is that we've got footage of him hanging out with us. I love that because Fonzie's on, in another country on the southern hemisphere. We don't get to see him very often, so this is great. I love that.
It is good. It is good. Fonz, talk to us about Asia. It's all Sean thinks about, especially this time of year. He wishes he was back there.
Last year you were in Asia, in different countries, but right now what stands out overseas is these Asian stocks breaking out of reversal basis. We have been seeing accumulating phases in multiple countries. Here is the AI Asia Top 50 ETF breaking out to new 52-week highs. And basically wanted to show you individual countries.
So this time last year, we were in Asia, but we basically went to every single country, and I had to tell everybody that it was a bear market in their country because none of the charts. Do you remember that, Sean?
I do. Steve would start off every presentation with, "Well, I've got bad news about your stock market."
and we would make the point, like, we want to see bases, right? We need AIA or THD or EWM, whatever index we were talking about, to look more like the bases in the US and developed markets. And now it's happening.
Yep, it's the moment. It's the right moment. Here is Japan. Recently reclaimed shell former highs of that monster base. So it looks good above 66. Here we have Taiwan leading by Taiwan semis. It's hitting our target. It recently broke off a massive base, new all-time highs. It's leading Taiwan to the upside. But again, look at this reversal base emerging higher. Here's South Korea, similar setup at the end of the day, breaking to new 52-week highs as we speak. It looks good. It speaks about broad participation in Asia, so that's interesting. That's something we haven't seen until now. Here's Singapore, a little bit more messy, but also carving out a nice bearish to bullish reversal. I like it about 19. I think you can define risk over there. And here we have
Korean bank.
yeah, like a Korean bank, because not only Asia is working, but also financials overseas are working. Not only European banks, not only American banks like Bank of America or JP Morgan, but Asian banks are really working, have been a good place to have exposure on international equities. So I think KB Financial, it's a 23 billion company. Above 64, I think it's a good option here.
And when you zoom out on this chart, it only looks better because this.
Yeah, it's monster reversal base. So yeah, it's definitely good.
Multi-decade financial crisis base.
Exactly.
Love these. I think these charts are all great. You didn't bring Malaysia. That's the one that I think you missed. The EWM. It's shaping up. Looks just like EWS.
It's shaping up, yeah, but it's still in the range.
Yes.
But definitely, it is important too.
Big development. I also think that this speaks to risk appetite because these are some of the most underdeveloped or emerging countries and indexes in the world, right? So this is risk on stuff if these are new uptrends.
Yep, I agree with that. Definitely.
Is it time for recess?
I think it is.
Yeah, let's do it.
What do you guys got?
I got something. I had my monthly trader meetup in Denver last night, and we got a special guest appearance by one Steven Weitzel.
Yeah.
A member of our portfolio accelerator, friend of everyone. He's traveling around the country in his RV, and he happened to be coming through Colorado yesterday. So he came in. Oh, hey, look at that. We got the picture. Awesome. Yeah, he came. We had a great turnout last night. It was a lot of fun. He had a great time. He, as you guys know, he can spin a story better than anybody, and he had a lot of people rolling with stories last night. So shout out Weitzel if you're watching this morning. Thanks for coming out, buddy. We got to have you on the morning show again soon. And man, yeah. I'm jealous, man. The way he's touring around the country in his RV, like that's a bucket list for me, man. I want to do that.
Oh yeah, Steven's awesome. That's so much fun. Look at this. Look at us. Fantastic.
Oh. Right?
Spencer doesn't know how to do this. Spencer can't do this.
I think we've ever had 5 people on before at the same time.
So cool.
Weitzel's the real deal.
Yeah, Weitzel's great. What do you got, Pat?
For recess?
Yeah.
Man, what do I got? I never have anything good for recess, Steve.
I'm watching. Go ahead.
I'm tapped out.
So I'm watching a new show. I mentioned it, I think, on the Spaces yesterday. It's called Presumed Innocent with Jake Gyllenhaal. It's fantastic. New episodes come out every Wednesday, I think, on Apple TV. Really enjoying it. Good show.
What's it called?
Presumed Innocent.
Okay. Is it drama? What?
Yeah, it's like murder mystery stuff.
Okay.
Very nice.
It's been so long since I've had a good show. I think the writer's strike just really messed things up.
Do you think I'm hard on Netflix? Do you think I'm too hard on Netflix?
I think you might be a little too hard. I think the problem is, Strazza, is that you're letting Netflix make suggestions for you. Get out of it. You don't do that. Be your own man. Be your own man. Find your own stuff.
Seize your own destiny.
AI stock. Their algorithm.
Speaking of Netflix chart, man, that thing, if it gets above 700, it's going to 1,000.
All right, listen.
You could have it.
Strazza, you and I talk about this a lot. Our mutual friend Barry Ritholtz talks about this, about how markets get funky whenever we travel. So I want to give you guys a fair warning right now.
You're going away.
Next Wednesday, I'm leaving. I'm going off the grid for 4 trading days. I'm going to be camping deep in the woods in Colorado. So And earnings season is starting. It's a bad time to go camping. So I'm just warning you guys now, everyone watching, that you should be on full alert for wonky trading action, because these things happen when we travel.
Yeah, we might have to take some off the board for this, Sean. Thanks for warning us.
You know,
It's a fair heads up for all of you.
I said the same thing last summer. And when you guys were gone in Asia, we had like one of the best markets ever. It was just like,
I remember.
You remember that? You were
Yeah.
you were staying up late there and just like trading options still.
It was really messing up our sleep.
Me and Sean were laying in bed texting each other about like what trades we were putting on or taking off.
No, man, implied volatility is too high.
I had a few nights I had to set alarms to wake myself up at various intervals throughout the night so I could check my positions. That's no way to live, man. It's no way to live.
No way to live.
Crazy times. Mary, what do you got?
So speaking of travel, I brought a picture from northern Michigan. Actually, funny enough, Stephen was through Michigan on part of his tour of the country. But so this is a Petoskey stone, and these are only found in Michigan, in northern Michigan, really. This is a result of the Ice Age and the glacier movement and like fossilization of things. And so this is fossilized coral. It's like coral and a rock and a fossil all in one. And it's called the Petoskey stone. You can just find them all over the beaches in northern Michigan, and they're pretty valuable in the sense that people will find really big ones and polish them up and that kind of thing, and then sell them for like primo bucks. So yeah, so we find them. We came home with a bucket full of them. They're just everywhere, and so this is my daughter holding one that she found.
So you'll just find them. They wash right up from the lake.
Yeah, it's just the beaches are, especially in northern Michigan, we have a lot more rock beaches, again, from the whole glacier thing. And so very rocky. And I mean, you can just take a bottle of water and, spray stuff down, or, we were right there at the lake shore, and it's just really easy to find them.
I know Mary will back me up on this, but Upper Michigan, what people call, some people, well, not the UP, I'm sorry, but like the northern part of Michigan of the Mitt, right? Everyone talks about the Mitt in Michigan. The northern part of Michigan is probably the most underrated vacation spot in the entire North American continent. It's beautiful up there, and nobody goes there except for people in Michigan.
You said northern Michigan?
Yeah.
Northern Michigan. So Petoskey, Traverse City, which is where we do all the big cherry stuff, and I sent to Steve his cherry pies. So we've got Mackinac Island, which is a cute little place that they don't have any cars on Mackinac Island. It's all horse and buggy and bicycles.
Yeah.
Big Mackinac Bridge that connects the lower peninsula to the upper peninsula, that's 7 miles long. Bonds, I know you saw the Golden Gate when we were there in Sonoma, and it's much, much bigger. So we've got lots of cool things.
My family's on this national parks thing now. So we're going to Yosemite in September. We were in the Redwood Forest earlier in the spring, and we're already talking about where do we want to go next summer. And I think what's that national park? Is it Grand Isle in northern Michigan? Is that what it's called? Grand Isle or something, or Royal Island or something.
Oh yeah, okay. Royale, yeah. So if you get to northern Michigan, make sure you also go to Pictured Rocks, which are up in the UP. That is phenomenal. Pictured Rocks.
Well, I think Michigan might be on our travel list next summer. We'll see. I would love to.
I've got a whole list of places for you to go to.
Awesome.
And Bonds, if you want to stick around for a few days after Chicago, I'll take you to northern Michigan.
Ooh.
Sean, can you drive to Yosemite? Right?
I could. It would take a long time. We're flying into Fresno. That's the airport you fly into.
I actually I went up to Yosemite around last September, so around the same time you're going. It was beautiful.
Yeah, the weather's still good there then, right?
Yeah, but like the leaves, I think I went a little after that, probably October, but the leaves were gorgeous.
Well, we chose late September because we wanted the weather to still be good, but we wanted to avoid the summer crowds. So we're hoping we picked it right.
Curtis Taylor in the chat saying great golf in northern Michigan too. I keep hearing this. People keep telling me.
Oh, I believe it.
Yep.
Guys, the show ended actually 5 minutes ago.
All right, goodbye.
All right, so thank you, everybody. Today was truly a really fun show. So thank you, chat, for helping make it more fun for us. Thank you, everybody, for coming on. Pat, Fonz, Mary, Sean, Grant. I don't know what we have scheduled for today, but we will be back with the morning show tomorrow at 8:30. So have a good one, everybody.
Qs are above 500. Get long.
Bye, guys.
Cheers.
I can't take no loss.